We are group 4 consisting of myself, Madhaveta, Anand Srinivasan, Joel Joy, Krishna Murugappan, Vidvat Parakram, and Arnav Pandey. We are here to talk about Devayani International's IPO, more about like an overview of the IPO itself and the valuation and our final call on the IPO.
So Devani IPO came about, I think, last year, isn't it?
2021, sir.
2021. It's a Pizza Hut and KFCs and all, no?
Yes, sir.
Okay.
Yes. Yeah, so I give the floor to Vidvat. Vidvat will go us through.
Yeah, I'm gonna start with the company background, giving an overview of the company background. So, Devayani International is the largest franchisee of Yum brands in India and are among the largest operators of the chain QSR restaurants in India. They have 692 stores across 155 cities in India. They operate brands such as KFC, Pizza Hut, Costa Coffee. They also have KFC and Pizza Hut stores open in Nigeria and Nepal. They have their relationship with Yum brand started in 1997 when the first Pizza Hut opened in Jaipur. Since then, they expanded their operations to 264 KFC stores, 297 Pizza Hut stores, and 44 Costa Coffee stores across India as of as when they went public, which is as of March 31st, 2021. They have divided their business into three verticals: core brand businesses, international business, and other business comprising their own brand. They launched their first brand, Wango, in 2011, which is a South Indian QSR chain. And apart from this, they operate brands such as Food Street, LA Bar, Amberley, Crush Juice Bar, and among others. Um, Now I'll be handing over the mic to Anant.
Hello, good evening, sir. Yeah, sir. So in this section, we'll see about the company's management and promoter base and how it impacts shareholder value. The board of directors comprises of 10 directors, including 5 independent directors, 2 whole-time directors, and 3 non-executive directors. The track record of the independent directors have proven to be impressive, with them holding director positions in the past in Global Health Private Limited, Blue Water Breweries and Distilleries, and foreign companies such as Arctic Overseas Limited. The promoter of the company, Ravikant Jaipuria, has an amazing and reliable track record because for the over the past 3 decades of experience in conceptualizing, executing, developing, and expanding food and beverage industries in South Asia and Africa. Furthermore, it is crucial for us to understand 2 things. The equity shares that is offered for the promoter's contribution, they do not include the following things. Number one, the equity shares acquired in the 3 years immediately preceding years for the consideration of the IPO. Number two, the equity shares that have resulted from bonus issue by utilization of revaluation reserves or the unrealized profits of the company. And number three is the promoter's contribution does not include any utility shares acquired during the immediately preceding year at a price lower than the price at which the equity shares were offered in the IPO. And the promoters of a company, moving on to the promoters of a company, it's number one, it's Ravi Kant Jaipuria, Varun Jaipuria, and RJ Corporation. We've seen about Ravi Kant Jaipuria in the previous section, so more about RJ Corporations. RJ Corporation is currently engaged in running franchisee of a sports brand trading in ice cream and milk products, and it also invests in activities in group and other companies. The ultimate vision of the promoters and the board of directors collectively is in terms of shareholder value and how they maximize this shareholder value in the long term. And for this, they go about it in two-step process. One is the profitability and growth, because profitability and growth and the return on their invested capital drives the value, and the focus is on generating consistent and sustainable profits with seeking opportunities for organic growth. And it also includes expansion into new markets and product portfolio improvement. And number two is the shareholder returns. Shareholder returns is created through providing dividends, share buybacks, or capital appreciation. And the experience of the board of directors also comes in handy when deciding the dividend value that the company has to give out of the company's profits. And the dividend value is ultimately dependent on the company's profits, accumulated earnings outlook, and the capital requirements. Such because Enterprises have like an experienced board, they can take judgment calls that will maximize the final shareholder value. And the another important thing the promoters and the directors should keep in mind while moving forward is considering environmental, social, and governance factors, and implementing these sustainable practices could lead to overall well-being of the company and the society as a whole. And moving on to Vidwat's case on
Okay,
competitors.
so now I'm gonna talk about the competitors of Devayani International. Few of the notable competitors are Jubilant Foodworks, Westlife Food World, Sapphire Foods, and Restaurant Brands Asia. But notably, there are two important brands, which is worth studying, is Sapphire Foods and Jubilant Foodworks. Sapphire Foods because they are also one of the Yum's franchisee operators in the Indian subcontinent. They have 437 stores, while Devayani has 692. Um, the franchise agreement with Yum allows the Sapphire Foods company to operate on a non-exclusive basis under KFC brand in several states in India and across Maldives. Uh, Pizza Hut brand in several states in India and across Sri Lanka and Maldives, and Taco Bell brand across Sri Lanka. As of June 30, 2021, the company owned around 209 KFC restaurants in India and Maldives, 239 Pizza Hut restaurants in India and Sri Lanka and Maldives, and 2 Taco Bell restaurants in Sri Lanka. The other noteworthy competitor is Jubilant Foodworks, which is the biggest company in terms of market capitalization. They stand at the top by at 36,990 crore valuation. Um, they are also they are franchise rights of Domino's Pizzas and Dunkin' Donuts in India. In financial terms, Jubilant Foodworks has consistently reported strong revenue growth, reflecting the popularity of the brand. The company's efficient supply chain management and operational strategies have contributed to healthy profit margins. Additionally, Jubilant Foodworks also has explored international expansion, taking Domino's brand to the neighboring countries.
Okay, good.
And now I will be handing over the mic to Madhav.
Madhav. Okay.
Yes, sir. Can you hear me?
Yeah, I can hear.
One second. Now we will be going over the IPO timeline. The IPO open date was on 4th August with an issue price band of rupees 86 to 90 rupees per share. And the offer for sale consisted of up to 15.53 crores shares by existing shareholders and promoters, along with a fresh issue of rupees 440 crores. The IPO was subscribed over 116.7 times with a GMP or grey market premium at rupees 62 to 64. On 16th August, which is the listing date, the stock was at a premium of over 60%, signaling much interest from the public. This translated to a listing gain of over 80 rupees per share for the investors, as the closing price for Devayani International on the listing date was 141.05. Now, looking at the IPO reservation, the QIB or the qualified institutional buyers were allotted 54.3% of the shares. The HNIs or high net worth individuals were allotted 27.1, retail being 18.1, and employees being at 0.5%.
Okay.
The application-wise breakdown of the investors can be seen here. QIP portion was oversubscribed by over 95.27 times, with NII being oversubscribed by 213.06, retail being oversubscribed by 39.48, and employee being oversubscribed 4.7 million times.
Okay.
Now, the utilization of the IPO funds, which was stated in the red herring prospectus, was towards funding the existing borrowing and for general corporate purposes. As you can see, this is a direct snapshot of their RHP.
Okay.
Now, IPO performance, as mentioned before, they were oversubscribed these many times. Now, the listing price on BSE reached an all-time high of 141.05 on that day and closed off with 123.35. And over the past 3 years, the stock price of the stock price has been
generally skewed, like it goes up and goes down, and it reached a peak of 222.45 on September 8, 2022.
Okay.
Here is a snapshot of their stock price. This is, I think, a week view. Uh, yeah, so I'll now hand the mic over to Krishna.
Krishna?
So am I audible, sir?
Yeah, yeah, you're audible.
Yes, sir. So, Madhav, the previous slide. Yeah. So talking about the financials of the company, the company's financials are showing some signs of improvement with positive developments such as a turnaround in net worth, a decrease in liabilities, and an increase in monetary assets. However, the company's revenue and operating profit have declined over the past 2 years with a decrease in the dividends paid as well. Looking at them in detail, and I'll focus on the main aspects. I think the slide shows yeah.
Okay, yeah, yeah.
Yeah. We could see that the company's revenue has decreased, resulting in a decline of 13.4%. This could be due to a number of factors, and yes, it's due to the COVID-19 impact, and because of that, the economic slowdown.
Okay.
The company's net worth has turned positive in a span of 3 years. This is a positive development and indicates that the company is now in a stronger financial position. The company is not yet profitable, but its net profit has been improving over the past 3 years. The company's monetary assets have increased from 37 crores to 55 crores, an increase of almost 40%. This is a positive development and indicates that the company has more cash and other liquid assets on hand. The company's EPS, earning per share, and the company's net worth per share has improved over the past 3 years. We can also see that the ROE, return on equity, has declined and led to a lack of dividends paid. Though this shows a negative sign, it was on its track upwards in terms of profitability as mentioned above. Madhav, next slide, please. So looking into the compliance for IPOs, in our case, Devayani, the eligibility criteria or the compliance of an IPO is given by SEBI. The company must register for an IPO by creating a draft red herring prospectus, a document that contains all the required details under SEBI guidelines. Firstly, SEBI requires the companies to be at least 3 years old, which means that it should remain a registered business for more than 3 years. In our case, the company was founded in the early 90s and IPO in 2021, as seen earlier in the presentation.
Okay.
Not more than 50% should be in cash or cash equivalents, like money in an account, cash receivables, or investment accounts. This simply implies a restriction of 50% on monetary assets, which is very much satisfied as given in the image.
Okay.
Its net tangible asset value should be more than 3 crores for each of the past 3 full years. Here we see an average of more than 1,000 crores of tangible assets. Hence, again, the criteria are satisfied. The company should have an average operating profit before tax profit of at least 15 crores calculated on consolidated basis and be available for the previous 3 years annually. And finally, the company should have a paid up equity capital of not less than 10 crores. Yeah, over to Shweta.
Hi, sir. Am I audible?
Yeah, you're audible.
So, as we had an overview of the financials by Krishna, using that, I'm going to explain the basis of the offer price. And post that, we're going to look at how we value the IPO. So the basis of the offer price consists of two factors, namely qualitative factors and quantitative factors. I'll start with qualitative factors first. First is the portfolio of Devayani International Limited, with a portfolio consisting of globally recognized brands like KFC, Pizza Hut and Costa Cafe. The brand value of the company seems very impressive. The brand value of a company as a moat itself is setting high standards for a company like Devayani International. Second one is the multi-dimensional comprehensive QSR player. For example, Devayani International deals in a wide variety of cuisines and line items and products, such as you have from pizza to burgers to coffees and even dosas. And the next one is presence in key consumption markets. Basically, if you look at key consumption areas over the country and map them on a map, you can find that Devayani International presence is found in every single one of these clusters. Fourth one is cross-brand synergies. One of their key brand is the Food Street, which basically is like a food court which organizes food courts in malls, airports, due to which we can see cross-brand synergies. And the last one is distinguished senior management team. As explained by Anand earlier, Devayani International has distinguished board and experienced senior management team. Next up, we have the quantitative factors. For this, I would like to go to the Excel. I'm gonna, yeah, let's just go to the Excel ones. So the three things that we are taking into consideration, this is from the RST released by Devayani International Limited. The first one is basic and diluted earnings or loss per share, EPS, as suggested for change in capital. As you can see, we have the basic and diluted EPS for the past 3 years, 20 year ending on March 2021, 22 and 2019. I mean 2021, 20 and 2019. We can also see that they've been incurring negative EPS in the last 3 years, and with weights 1, 2, and 3, the weighted average basic EPS comes out to be minus 0.755. Same for both basic and diluted EPS. And the next one is return on net worth. In a similar way, we had the weights as 1, 2, and 3 for the years 2019, 2020, and 2021. But we can see there is NA mentioned in 2019 and 2021 because there has been negative net worth, and the net worth, the company has had loss and there has been negative net worth, thus resulting in a non-applicable return on net worth. But we have a 4.852% return on net worth for the year 2021, which gives us a weighted average of minus 24.26. And post that, we'll come down to net asset value per equity share of face value of rupees 1 each. This is as per the red herring prospectus. We can see that as on March 31st, 2021, the net asset value per equity share of face value of rupees 1 is just about 1.03. Next up, we'll go on to the valuation of the IPO. First, we've done two different valuation, which is relative and regression valuation. I'll start with the relative valuation. We didn't look for PE ratios because most of the companies in the industry was incurring loss at that time, given it was COVID time.
Okay.
And we preferred EV EBITDA. I mean, we've done both EBIT and EBITDA, but our final conclusion was majorly based on EV EBITDA. This is because different companies have different depreciation principles. Moreover, looking at the operating profit seems like the best fit, as the businesses are consumer based when compared to the earnings per share and PE ratio. And another rationale on why we didn't look at PE ratio is that we felt that enterprise value gives us a comprehensive view of the company's values, as it adjusts itself for items like cash and debt that impact a company's real value to a potential buyer that are not reflected in the stock price. So as we can see that we are looking at EV EBITDA, and we can see the median EV EBITDA to be 10.92, and our Devayani International being 15.92. Saying we are coming to a conclusion saying the company is overvalued, but we've also looked at EV EBIT and market cap by per EBIT, which comes out to be undervalued. So as per this, we couldn't reach to a final conclusion on whether the company was undervalued or overvalued. So we did a regression valuation to check the same. Can you go to the regression valuation? Yeah. For this, we use this data set. We started by using a data set of 42 companies, including hotels and restaurants, along with QSRs. But we found that actually didn't make sense. So we went back to just the data set of QSR, but we had only like a limited number of observations.
So
We had only
where is the data? I mean, data set.
uh, yeah, the next one. Yeah.
Okay. So I would like to see which
That's
all
the
companies.
entire data set, sir.
Okay, okay, good.
But we've used only the first 7.
Okay, okay. No issues. But I think you have done a good job because you have got a lot of companies. Basically, it's always better. But anyway, you have just restricted yourself to the companies which are in line with Devayani International at the same
Yeah,
basis.
because even the industry, like industry EV EBIT was like way different for both industries. So we thought we'll just stick with, even though we have a limited number of observations, we thought it's better to stick with
So
this.
Shweta,
So
have you gone through the my video also? I mean, before preparing this, or how did you? Yeah.
yes, sir. So we gone through your video, but we've had every one of our members have prior experience in regressions. So
Acha.
we incorporated our prior
Understanding
knowledge
about regression.
on
I mean,
regression.
you did that was business statistics. You did, is it?
No, sir. So we are all economics majors.
Okay.
So
So it's a part of your
yeah, yeah.
curriculum. Yeah.
Yeah, exactly. So it was nice to incorporate stuff from what we've learned previously in this and
Yeah,
put
yeah, it's
a
good
good
because
show.
then
Yeah.
you have some prior knowledge, so, and then you apply to the practical basically. I mean, like IPO. So what you have done, it's a good job. Yeah, definitely. So how was your
Yeah.
otherwise? I mean, does the course help you to I mean understand the IPO and everything? And have you done a similar course earlier?
No, sir. We've never valued an IPO as such. We've done companies before, mostly relative and DCF before. We've never done a regression valuation
Okay,
and an IPO valuation. So this was the first time. It was really nice
okay,
to see
okay,
how
okay.
things played out.
Go ahead.
Yeah, so in order to account for that limitation that we have, that's the smaller number of sample size, we have a bigger bracket of 90% confidence level, and we can see that operating profit margins and sales growth have a significant impact on our EV EBITDA with a t studies with a p-value of less than zero point 0.1, and the coefficients being 1.68 and 1.44.
Okay,
And in the right hand side, we can see the valuation of GIL as per the regression valuation, and we come out to a conclusion saying the expected EV EBITDA was around 21.814, but the actual EV EBITDA was around 15.92, concluding that it was undervalued.
okay, good.
So I'll give the same on to Joel
So
right now.
Shweta 3. So Shweta, you are from which place?
Tamil Nadu, sir.
Tamil Nadu. Okay. But you have missed most of the lectures, isn't it? But you watched all the videos.
No, sir. I've attended most of the classes.
That's most of the classes. Okay, okay.
Yeah.
But I could see all your messages that you're not able to come or you're coming late or something. Maybe that would have.
Oh, yeah. I've messaged you a couple of times saying I was running late because.
Okay, okay. No issues.
Yeah.
Chalo. Okay, who's the next person?
So it's me,
Yeah,
Joel.
Joel.
I'll be going over the risk factors.
Joel,
So
you're
Devyani,
from which place?
I'm from Kerala, sir,
Kerala.
South India.
Yeah,
Yeah.
I know, I know.
Okay. Devayani International, like any investment opportunity, comes with inherent risks. Understanding these factors is crucial for making informed decisions. So one of the major concerns is the fluctuation in revenues and consistent losses in the fiscal years of 2019, 2020, and 2021. Their net losses have historically resulted primarily from high operating costs which is directed towards the expansion of their network, store network, and their inability to successfully recover their costs through the operations at the stores. They have also incurred losses due to high corporate level overhead costs and towards funding certain loss-making businesses, such as the operations at the airports in India and the TWG business that was carried out by their subsidiary DO IPO. Devyani International has also experienced negative cash flows in the past, which would adversely affect its cash flow requirement and ability to operate the business effectively. The impact of COVID-19, as well as the government measures to reduce the spread of COVID-19, had a substantial impact on their operations across India and abroad. Their revenue generated from in-store dining was a little over 5,400 million rupees and represented over close to 50% of their revenue from operations in 2020, but it declined to 2,000 rupees and represented only 30% of the revenue in 2021. Revenue from operations also declined by 25.6%, close 60% under their core brands business in 2021 due to significant decline in footfalls on account of
Okay, just hold on. I think I'm just getting some issues with my.
like major brands like Yum or KFC and Pizza Hut and Costa Coffee for its coffee stores is a notable risk. Any termination or inability to renew these agreements could have a material adverse effect on Devyani International's business. In 2019, 2020, and 2021, revenue from KFC and Pizza Hut stores represented 76%, 77%, and 92.28% of total revenue, respectively. Revenue from Costa Coffee represented 6.8, 5.41, and 1.8 in the same years from revenue of operations.
Okay.
They'd also been granted exclusive development rights in India that were contingent upon their ability to meet certain development commitments, but their inability to meet such development commitments and remedy their breach within cure periods led to their exclusive development rights being terminated. The sustained compliance costs and material agreements is also a major risk. The legal and compliance constraints associated with material agreements, YUM, brand-related aspects, and Costa IDA compliance involves various expenses. These include continuing fees, approval costs for brand-related aspects, and compliance costs to ensure adherence to the agreements. The company is also subject to a non-compete obligation that limits its ability to expand within the QSR segment. There are also outstanding litigation proceedings against the company, subsidiaries, directors, and promoters. They face many outstanding litigation proceedings. Now I'll hand it off to Arnav to talk about the company's performance.
Okay, Arnav.
Sir, can you hear me?
Yeah, I can hear you.
Yeah. So finally, after everything that everyone has said, I'll just like to talk about the performance and then conclude. So Devyani International, it has been a staple of the quick service restaurant industry in India. And since its IPO in 2021, August, it has seen impressive growth, though it was hindered by the impact of the pandemic. So its initial price band was of 86 to 90 rupees per share, and since then it ended at I think, as Madhav mentioned, the highest amount it reached was 123 rupees, and the share price currently in the third quarter of 2023 was reached a high of 226 rupees. So now, of course, the pandemic was difficult for most, if not all, restaurants, but thanks to the really good management as talked about by Anant, the Devyani International was able to really quickly adapt and then transfer into the online food delivery model that helped them not only save some of their losses but actually improve for the future, as we'll talk about. Now, finally, growth has been consistent, and the PE ratio in 2023 was 65.79. Other value multiples such as EV by EBITDA and all, Shweta has already gone over. Now, the QSR industry in itself is a huge growing industry in India. So, thanks to the current young population in the country, there is increasing popularity for online food ordering. There is increased popularity among meat-based dishes. All of these add to the overall popularity of the quick service restaurant industry, and it's going to see good profit growth as well as overall growth in the industry. Now, the company itself, Devyani, has seen good profit growth, as we can see a compounded annual growth rate of 53.7% over the last 5 years. And even though there are other giants mentioned earlier, such as Jubilant and Best Life, Devyani holds its own among all of these. So, talking about, or finally concluding, even though there are such issues like lack of dividends paid by Devyani and poor the same store sales performances, the overall performance of Devyani International remains to be decent, and it continues to go towards an upward trajectory, especially with the QSR industry being the largest segment by outlet type and looking to grow by a huge amount. Finally, we'd like to conclude by saying that even though financials seem sort of poor, Devyani International is a good or was a good buy when the IPO was launched. Thank you.
Okay, great. It was a very wonderful presentation, and I think you collected all the data very well, and the quality of presentation was excellent. Okay, now just coming to conclude from my side, and then we can just part. How was the subject? So, how do you find? Was it a good experience for you?
Sir, as I mentioned before, we've never had experience in valuing an IPO or anything related that was not related to companies and stock as such. I think the course itself gave us a different view that we never looked up to before. So it was overall it was a really fun experience and I really liked it.
Okay. Anybody else? Okay, so we just you're saying something, mother, or something, Deepak?
No, so I was saying it was a very nice experience, and the only problem that I had was that the classes were 3 hours long. So like, if there's any way like the futures classes could be
And on a Saturday.
On a Saturday, yeah. So I can understand on a Saturday and a 3 hour long class. So Saturday is always a weekend kind of a thing. So many students they try to miss out because for holiday, and I mean, so that I can understand. Okay, fine, no issues. So okay, so all the best for your exams. So when are your exams finishing?
Done, so
so
most of the exams.
Huh?